Both Bitcoin and the traditional market are in a critical context. We're at a market extreme where, as you can see, Bitcoin and the S&P 500 are in a situation where we speculate that it makes sense to expect a short-term price appreciation before a fall. And this is not only seen in the cryptocurrency market, but also in the S&P 500. With everything happening between Iran and Israel, which we have been covering in our recent videos, we know the situation is tense. The S&P 500, as you can observe, has been working on an uptrend impulse that is continuing with an uptrend channel. Upon this structure, we have identified that recently we encountered what we assess as a possible trap. A possible trap that, if you look closely, is preceded by a bearish impulse that has formed a W, a poor I, and then a very aggressive Z. This Z has exceeded the structure, as mentioned earlier, to eventually create a trap. Given this event, it's plausible to have a bearish bias in the market, and it's quite strange, quite coincidental, that when the price of the S&P 500, remember it's the index of the top 500 publicly traded companies in the United States, is at the ceiling of a macro channel in a trap situation where we're clearly in a complex corrective pattern that ends in a compression in a Z. Just at this moment, the conflict between Iran and Israel evolves, thus generating a movement catalyst that makes perfect sense. Practically speaking, if we are at a market extreme and we say we are in a Z whose objective in the future will be to come back to test the trend line of its corrective pattern, in the long term, it's prudent to have a bearish preference. Remember, you're looking at the daily chart from a very broad perspective, and for this kind of movement to occur, months will have to pass. And when we cross this information with the Bitcoin chart, we realize that we are at the top of a macro structure that has actually left a gap. Look at how well this channel is traced. That gives us the confidence to interpret this gap correctly, which is nothing but buying weakness. And if it turns out that Bitcoin doesn't allow us to see in a simple and straightforward way that we are facing a Z, even though visually it's clear it's a Z, thanks to the analysis we have crossed. If we analyze Ethereum in its daily time frame, here we see the bearish impulse with its W, its poor I, and here a clear and evident Z whose objective, whose bias is to look downward, an event that seems to have already started. As you can observe, both the traditional market, the S&P 500, and the cryptocurrencies Bitcoin and Ethereum in the long term have a negative bias. In other words, we'll prioritize looking downward, assuming that what we've analyzed is true for the long term, which, as mentioned, will take weeks, months for all of this to unfold. What we need to understand is what we can expect in the medium and short term. If you're watching this video, you not only want to know our long-term sentiment, but also want to see a video where what we inform you about ends up reflecting in your chart, so to speak, the next day. So, let's zoom in, considering that we are facing a Z of the S&P 500 at a market extreme. Here we'll see that the wedge has formed, the classic wedge that arises from a Z, and upon its breakout, what we observe in these types of quotes is a strong bearish breakout like the one we have. This breakout impacts us against a structure that will be the macro trend line of the Z in the future that we will seek to break. And when we break the Z's wedge, we generate the strong bearish impulse that hits us against the future trend line of the Z. What follows is a corrective pattern, in this case, looking upward bullish before being able to break and then looking downward. In other words, for the short term, even the immediate term, yes, we still expect the markets to rise, not only the traditional market, as you're seeing in the C500, but also the crypto market. And it's precisely for that reason that in Bitcoin and the crypto ecosystem, at this point we wanted to look for long positions, and in our Crypto Insight live sessions, we explored how we could incorporate ourselves into a long idea. A long idea that, as you're able to see, not only with Bitcoin, but also with the entire crypto ecosystem, has not been bad at all. Well, what would be good? Quite clear, right? For the long term, betting that we still don't have a black swan event, that this should turn around now, hoping for it to rise and test us. In the test, it doesn't have to rise much, but in this test, we can buy. And here, we need to be careful up to where, up to there, and there we release. We could reach for that stretch. Okay, with Ethereum, what are we going to do? We'll work on this trend line. We'll see if we regain the micro defense zone on the 1-hour chart, which is this one here, and upon recovery, we'll wait for a test, and upon the test, we buy, and there we look for the purchase, and hopefully this breaks. If we don't have a micro stretch, but if it breaks, great. It will lead us to something more. Here, it won't let us down or on the stretch. No, but Solana, yes. If it makes a move, it's different from the rest. Makes a trap on the trap here. Here we can look for a purchase. With this we have adjusted, for Solana. First conservative target. Here you have it. The second is very close. That's what's there. And with BNB, we'll let it rise. There's a click, we'll let it rise. And in this test here, in this test there, we can look for the purchase. Here, the first target is achieved. As you've observed, thanks to cross-referencing information and understanding that in the S&P 500, after experiencing a macro Z that came from potentially setting a macro structural trap upon breaking the Z wedge, this bearish impulse was generated. We know they'll seek very key representative structures to start correcting the recent bearish impulse. So in the future, when we were here in the S&P 500, hey, we need to look upward. Cross-analyzing, we saw with the crypto ecosystem here we could be facing a trap, a perfect event to start buying. That's why in our almost daily live sessions in Crypto Insight, we analyze and look for long positions in the market. Now, I'll tell you how I think the big institutions are going to approach the next moves. But before, welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity. Now, I'll tell you how I think the big institutions are going to approach the next moves. Okay, here you're looking at the Bitcoin chart on a 1-hour time frame. Previously, we were working with a trend line very similar to what I'm drawing for you, and here we were seeing the Black Swan event. So what we have next could be a flat pattern. However, upon seeing the price development, it seems prudent to start working on this overarching structure. All right, what's happening? If we zoom in on the Bitcoin chart, let's interpret the following. On the 1-hour time frame, here we identify stop volume, the first sign that major institutions want to halt the price. In the next bearish attack, we see a significant amount of volume, and the price is unable to continue downward, so we're speculating here that Bitcoin has absorbed this. In the following bearish attack, this one here, we also see a lot of volume. Volume compared to the bearish impulse that is unable to continue downward, so we see that the result doesn't match the effort, indicating we're again in a bearish attack facing absorption. And if you look at the third bearish attack, again, we observe more than interesting volume where we also see the price not progressing downward, so we can speculate that we're again facing absorption. But what also becomes interesting here is that in the next big green candle, we see again how volume comes into play. And here, it's still to be seen, but it gives the impression that we're facing aggressive market buys. We'll have to see if the price breaks the creek and prospers. We'll believe these are aggressive market buys fueling this bullish impulse, so it's more than probable that it will push the price up in the short term. Remember, you're looking at the 1-hour chart. In other words, regarding this bearish impulse, here we have its W this. Here we'll see if it's a poor eye. So these aggressive buys actually fail and bring us down. Later, we speculate that they'll break to go for a Z, which justifies all this bearish absorption we've seen, breaking the creek with force and going to an institutional target to justify the pursuit of a Z. If we were to see a confirmation of what we've observed soon, it would indeed be aggressive market buys. Regarding this bearish impulse, here we have the W, and we would simply go for a simple corrective pattern composed of AI higher than the W. Likewise, we would look for the opposite trend line to break, since we would have reached the bullish institutional target of the accumulation process. You're seen to break and move downwards. Honestly, the market is very, very interesting. Now you're looking at the Ethereum chart on a daily time frame. Remember, this was a Z. This is its impulse that breaks the Z wedge. Here we have Ethereum's ZEB trend line, which would have already broken. Let's move to a 4-hour time frame, and here we see very similar things to Bitcoin, that we have stop volume, absorption at key points, hence why it makes sense to look upward for the immediate term. But beware, if we analyze the volume from a broader perspective, we see that the breakout of this structure, these two candles, has strong volume. So for the long term, they're telling us that the major institutions eventually, after what seems like a distribution here over a key structure coming from a corrective pattern of a Z, have broken with volume. They've broken seriously, so it's plausible to expect what could be a flat pattern before continuing continuing downwards. But notice how that same volume on a shorter time frame, in this case on the hourly time frame, if we analyze the volume, it seems like they are accumulating to go upwards in the short term. I don't know if you just understood me or if you're following along. So in Ethereum, regarding this bearish impulse, here we have its W, here we have its trend line. Don't forget, here we'll see if this is a poor I, and here it turns around to then look for a Z. We'll see how far it goes. It could easily be up to here or just generate a small structural trap to justify a Z here and then break the flat pattern that justifies the macro volume of this structural breakout. Or alternatively, we'll look for either a pori to go for a Z or that Y is somewhat broader to end the flat pattern. Ultimately, what we're seeing in the entire crypto ecosystem is that at a macro level, of course, we are bearish in the long term, looking at weeks and months ahead, and for the short term, if we see that it makes sense and that we are experiencing the corrective pattern of a bearish impulse, that corrective pattern rises before falling to make sense in the long term. We evaluate this rise within the Premium Crypto Report live streams to find intraday trading opportunities if that rise is going to happen now or not, and how to trade it, as all of this is a complex world, which is why we connect daily in sessions of about an hour. Now tell me, what do you think will happen with the crypto market and the traditional market for the short and long term? Will we go up or down? Leave your opinion in the comments. You can also support the channel by liking this video, subscribing to the channel, and clicking the bell icon so that YouTube also notifies you of future uploads. Good luck with your trading, and until next time.